Today, PayPal announced they're launching their own stablecoin known as PYUSD. This has the potential to be huge, not just for stablecoin adoption, but for the crypto industry overall. In today's video, I'll break down exactly what this could mean both for PayPal and for crypto. Welcome back to Dynamo DeFi. My name is Patrick, and as always, nothing I say in this channel is financial advice. This is entirely for educational purposes. Now, let's get into it. To start, let's go through all the details of what exactly we know about PayPal's new PYUSD stablecoin so far. To start with their announcement here on Twitter, you can see that it will be rolling out in the next few weeks, and you'll be able to buy, sell, hold, and transfer PYUSD. To dive in a little more, let's look at exactly what it's backed by, some details about the issuance, and then what it can be used for. Diving into their announcement page, we can see that it's backed by dollar deposits, US Treasuries, and cash equivalents. This sort of backing is pretty standard for stablecoins that are collateralized by off-chain reserves. It remains to be seen exactly how much transparency PayPal will give into these reserves and how easy it will be to redeem it one-to-one with a dollar. However, with a publicly traded company like PayPal, I think we can be pretty confident that there will be some degree of transparency here. As far as the utility of it, they give some insight into that on this page as well. You can, of course, buy and sell it. You'll be able to convert it into other cryptos, so you might see some utility from people who are trading or buying and selling ETH and BTC, and they want to convert back to PYUSD when they're out of the market. Interestingly, you'll be able to use it as payments as well. So you can check out with crypto at millions of online stores that accept PayPal, and they'll sell it and automatically convert it into the currency that's being spent on the site. And then also you'll be able to send and receive it between friends. So this is interesting. It's not just going to be trapped in your PayPal account. You'll be able to withdraw, you'll be able to send it to friends, etc. Thoughts on the utility of PYUSD so far? Well, there's really three main reasons why you would hold one stablecoin over another. The first is the utility of it. That is what you can actually use it for. And that could be for payments, that could be for uses in DeFi, or it could be for something else entirely. And I think PayPal does a pretty good job of establishing that utility for their PYUSD here. If you wanted to sell your Bitcoin, you wanted to sell your ETH, and then you wanted to spend the funds, then PayPal would probably be a pretty convenient way to do it, right? You could convert it to PYUSD, maybe be ready to jump back into the market if you wanted to, but if not, they have millions of stores that accept PayPal that you could easily spend it at. So I think this is going to be a pretty good way for people to off-ramp their crypto. And I think they've got that use case kind of down. The second reason why you might hold one stablecoin over another is the opportunity to earn yield on it. So you could deposit it into DeFi, either to lend it out or to put it in a liquidity pool, and you could earn some substantial yield. And they don't really address that here. They don't talk as much about how this might be used in DeFi, or if they're even going to try to push its use in DeFi. So remains to be determined whether that use will be a thing. In general, most stablecoins, people don't hold it for the yield, especially with US Treasuries being as high as they are. However, we have seen some stablecoins in the past, like Terra's ill-fated UST, which people held primarily for the yield. And then the third reason why you might hold one stablecoin over another is because you're waiting to buy crypto and you want something that's reliably going to equal $1 in the meantime. And in this case, I think PayPal covers that pretty well. If we dive in a bit deeper into their press release, then we can see here that these stablecoins are actually being issued by Paxos Trusts. Paxos is long trusted to issue a number of fully backed stablecoins, and not to mention the fact that the stablecoin has the confidence and trust of PayPal, which is a massive company that does tens of billions of dollars in revenue every year, and they're not going to want to sacrifice all that reputation for a stablecoin. So I think in terms of reliability, it's pretty good, and in terms of being able to spend it on BTC and ETH, that is also pretty solid. The one thing that remains to be seen is whether you'll be able to spend it on other on-chain assets or even a wider variety of crypto assets on exchanges. Diving in a bit deeper to some other details that we learned today, we learned that PayPal USD will actually be available for use on Venmo as well. So that's extremely important if we're looking at peer-to-peer payments. Don't know whether there'll be any reason for someone to use this over a traditional Venmo payment, but at the very minimum, that's millions of people who will be potentially exposed to stablecoins for the first time. Some other details is that this will be an ERC20 issued on the Ethereum blockchain. So not on a layer 2, not on an alt layer 1. This will actually be on Ethereum itself. However, PayPal has said that transfers within PayPal won't have any fees on them. Another thing that we learned today is that this will actually only be available to US customers. So unfortunately, if you're outside the US, you will have to wait, at least at the start, to use PYUSD. This is for US customers only. And then the final thing that jumped out to me from this announcement is that they have stated that they are working closely with regulators. So yes, there are concerns. Could this attract the attention of the SEC? Could this attract the attention of other regulators? However, just making an assumption here, I am sure PayPal thought of that when they were designing the stablecoin. They didn't just do it on a whim, and they do reiterate in the press release that they are working closely with regulators as the industry evolves. So perhaps this will set a precedent for institutions or financial technology companies to issue their own stablecoins. So what could the implications of this be both for PayPal and for stablecoins? Well, for PayPal itself, I think it's a massive opportunity. If we just look at the total stablecoin market cap right now, then we can see that the total market cap of all stablecoins is around $125 billion. And this is actually down from being all the way up at $189 billion last year. That's a huge amount of dollars that are already locked in stablecoins, and PayPal naturally wants a part of that. And why would they want a part of that? Well, if we look at Tether, which is currently the largest stablecoin, we can see that last quarter alone, they earned over $1 billion in operating profit. So it's not a surprise to me then that PayPal would see those sorts of numbers, see the opportunity for stablecoins to become a huge part of online payments and value storage, and think, well, maybe they want a piece of that profit. And for people who are wondering, how would they earn profits on this? Well, the way that a lot of stablecoins earn money is it's backed by dollar deposits, US treasuries, and cash equivalents. So those US treasuries are earning some yield that right now is probably around 5%. That yield isn't being passed on to people who are actually holding the stablecoin. So while these people are holding billions of dollars of PYUSD and using it to transfer, using it to trade, etc., meanwhile, PayPal is earning interest on all of the reserves. So pretty big opportunity for them. And I think the real implication of this is, if this is successful, if PayPal is able to onboard tens of billions of dollars worth of reserves into their PYUSD, then they're going to start posting some pretty nice revenues and profits in their quarterly reports. And it wouldn't surprise me if you saw other companies see that and decide that they wanted a piece of the pie as well. And then you could have either other tech companies or other financial institutions launch their own stablecoins. Another implication of this is that I think this is really huge for stablecoins. And the reason for this is that PayPal just has a massive number of users. 400 million active consumer accounts, 35 million active merchant accounts, and $1.4 trillion in total payment volume over the last 12 months. That is, that dwarfs anything in crypto right now. And so even if a small, tiny fraction of that ends up using crypto as a result of this, it would be a huge number of incremental real users, right? One of the things that crypto struggles with historically is that most people are using it for speculation. If people are using it for payments instead, then that's a lot of organic use and organic inflows that are completely independent of market conditions and completely independent of whether people have the ability to speculate. As an enthusiast for decentralization and cryptocurrency, I do have some concerns about this. This does open up the possibility for PayPal to either freeze funds or censor people otherwise. However, I think in terms of total value added to the cryptocurrency market, this is net positive, because this will add more legitimacy to the entire market and cause more people to be onboarded to crypto overall. And some of those people will naturally find their way towards more decentralized solutions, especially once they bring their PYUSD into the wider crypto ecosystem. Not to mention the fact that more off-ramps and on-ramps is always good, since the crypto industry has struggled with those in the past. To read more about my thoughts on this, as well as other narratives in the news right now, be sure to subscribe to my Substack at dynamodefi.substack.com, link down in the description of the video. And if you want more videos like this, be sure to like this one and subscribe. Until next time, this is Dynamo DeFi.